I'm not gonna lie to you. The last 12 months have been pretty rough for crypto investors. Prices are down, people are getting nervous, and some investors are even saying it might be time to get out. But what if I told you there was an asset that has historically returned more than twice as much as crypto and stocks combined? Would you believe me? Well, in today's video, I'll show you exactly which asset that is and why it may be your best investment opportunity of the next decade. Let's get right into it. So let us start off by acknowledging that both stocks and crypto have had a great run over the last decade. For example, Bitcoin has increased from under $1,000 to nearly $70,000 since 2013. And Ethereum has seen similar growth, going from just a few dollars to around $1,000. Meanwhile, the S&P 500 has increased by almost 200% since 2013, and tech stocks like Amazon have grown exponentially as well. However, since the beginning of 2022, we've seen a stark contrast, with the markets being down and some investors starting to question where all this growth will come from. So in this video, I want to go over one asset class that's still growing even during a bear market, plus how you can get involved as well. Before we get started though, smash that like button and subscribe if you want to grow your wealth. Also, I need to let you know that I am not a financial advisor, and this is not financial advice. So make sure you do your own research before making any big decisions. Now let's begin. First off, I think it's important to acknowledge why so many investors are concerned about stocks right now. For example, inflation is at record highs, interest rates are increasing, and geopolitical tensions are at a boiling point. Not to mention the economy is showing signs of a recession. It is also worth mentioning that the Federal Reserve has signaled they're willing to sacrifice economic growth to bring down inflation. And to make things worse, they've already started to shrink their balance sheet as well. As you can see here, the Fed has signaled their intent to raise interest rates until inflation is under control. And so far, they've already increased interest rates 3 times this year alone. This is the fastest rate increase cycle ever. And analysts are predicting the Fed could raise interest rates even further than they signaled before. As you may already know, interest rates and asset prices have an inverse relationship. So when interest rates rise, stock prices generally fall. And with the Fed aggressively raising interest rates, it makes sense that markets would be down. Additionally, rising interest rates also put pressure on corporate profits. In fact, a study found that when interest rates increase by 1%, profits decline by 2%. Now, with interest rates rising even faster than expected, it's no surprise that markets are feeling the pain. But here's the thing. While it's true that higher interest rates tend to weigh on stocks, it's also true that they benefit certain types of investments. For example, bonds typically perform well in a rising interest rate environment since they offer investors a fixed income. In fact, if you look back over the last few decades, you'll notice that every time interest rates were raised, bond prices continued to increase afterward. Now, I know that probably sounds crazy since you would think that if interest rates are going up, bonds would go down in price. But that's actually only true for new bonds. For existing bonds, once interest rates peak, they tend to fall and bond prices increase. That's exactly what happened in 2004, 2006, and 2018. But the real reason why this happens is because once interest rates peak and then begin to fall, investors scramble to buy bonds paying a higher yield. And so this increase in demand causes bond prices to increase. Although this chart only goes back to the early 90s, the same thing happened in the late 90s after the Fed lowered interest rates from 6% to 1%. In fact, the longer the Fed keeps interest rates higher, the bigger the move tends to be once they begin lowering them again. So this means that we might still have a ways to go until bond prices begin to really rise. But when they do, it could be a big move. But even if we don't see a huge spike in bond prices, there's still another asset class that may outperform both stocks and crypto. That asset is called fine art. For thousands of years, wealthy individuals have turned to art as a way to diversify their portfolios. In fact, even the world's most successful investors, like Warren Buffett and Steve Wynn, they've got a lot of money tied up in art. But if you're not a millionaire, is it really possible for you to invest in art too? Surprisingly, the answer is yes. You see, according to Citibank, the art market is worth around $1.7 trillion. And the average return for art over the last 25 years has been 23.6% per year. That's more than twice the returns of both crypto and stocks combined. But that's not all. Art has also historically been a great inflation hedge. During inflationary periods, art prices have increased by an average of 16.3% per year. That's almost twice as much as stocks. And if you're wondering how much you need to invest, the good news is that you can start investing in art with as little as $5. Masterworks is an investing platform that allows you to invest in multi-million-dollar paintings for just a fraction of the cost. Here's how it works. Masterworks buys a painting and then offers shares of that painting to investors like you. If the painting appreciates in value, you can make money. If the painting depreciates in value, you could lose money. In the past, Masterworks has offered shares of paintings by legendary artists like Banksy, Monet, and Picasso, and each painting has appreciated in value. While past performance is not indicative of future results, Masterworks has sold 3 paintings so far with each returning over 20% net IRR to investors. Plus, this is a truly passive investment. You don't have to pick the individual pieces. You don't have to hang the artwork. You don't have to insure the artwork. Nothing. And if you ever want to sell your shares, you can list them on the Masterworks marketplace and sell them to other investors. I mean, personally, I've invested a few $1,000s into artwork, and so far I've made over 15%. But here's the best part. Right now, Masterworks is offering a new painting from one of the most famous street artists of our generation, a man named Junior. His work has been displayed all over the world, from Paris to New York, and his sculptures have been featured at the Louvre Museum. The piece that Masterworks is offering is a sculpture of a woman holding a flower titled Ode to Joy, and it's expected to appreciate in value over time. Now, while past performance is not indicative of future results, this is an incredible piece that could be a great addition to any portfolio. If you're interested, I'll leave a link to Masterworks in the description below. But please act fast. Once this sale is over, it's over. Even if you're not able to invest this time, I highly recommend signing up for their waitlist. That way you'll be notified when they drop a new offering. It usually happens a couple times per month. I'm telling you guys, diversifying your portfolio with art is one of the best ways to reduce risk, especially when other markets are feeling shaky. And with interest rates rising, it may be one of your best investments yet. Overall, even though the last year has been tough for crypto investors, it's important to keep a level head. Yes, prices are down, but that's normal. In fact, since 2013, Bitcoin has had 6 different drops of 40 or more. In my opinion, the key to success is staying focused on the long term. Cryptocurrencies are still growing faster than traditional assets, and they have the potential to change the world. Take Bitcoin, for example. Its market cap has grown from under $1 billion to nearly $400 billion since 2013. Meanwhile, gold's market cap has stayed relatively flat. It's clear that Bitcoin is growing exponentially, which means it still has plenty of room to grow. Sure, there will always be volatility in the market, but that's to be expected. Just take a look at this chart. Since 2010, the S&P 500 has had multiple drops of 30 or more. Yet most investors stay the course and continue buying in. The bottom line is that investing always carries risk. But if you're willing to stay focused on the long term, crypto could be one of your best investments yet. Thank you guys so much for watching. Also, make sure to add me on social media if you want to stay in touch. Lastly, smash that like button and subscribe if you want to grow your wealth. See you in the next one.